Hello people, so finally get my laptop. I mean, been a bit for a little while, but I finally start out everything on it and transfer everything, etc. etc. It's a Samsung Book 5. Yeah, Samsung Book 5. Anyways, so every year I essentially make a video reviewing the stocks that we picked for the year before. It's this kind of late because whatever. However, this party must go on. So this is not by any means any farm analysis for the companies. The next videos will be my top stock picks for 2026. But this is just a review of the stocks that I picked for 2025 and to essentially see how they are doing. As you know, we have three categories. We have dividends, we have stable, and we have growth stocks that we had categorized. So once we list all the stocks, all we're going to do is one just get like why they how they make money and if anything major happen in 2025. And then after we finish that particular group, which for example the dividend, once we finish the dividend stocks, we can go to whether or not the stock price went up and why may or may not have are you go. Say so the first one on the list is Supreme Ventures. Yeah, I put metrics on the screen because we already established these already from last year. And we're just going to go to the hold on. So first one on this is SVL. Essentially is a gambling company. Lottery gambling company essentially. The thing with SVL is that SVL also is in fintech. So fintech would be helping different companies do processes for financial payment. They also do digital integration and operations for different companies. So yeah, last year they paid a dividend of 3.11%, and the recovery ratio was 101, meaning say they essentially paid out more dividend than what they made in profit essentially. So next one on the list is TJH. TJH big hitter. They paid out 6%, 6.1% the dividend at last year, say last year, and it was 62%. I think chances were one of the well, they paid out 62.5%. Trans essentially operates the other one. So you know more Spanish Town one. They have the new one in which is Williamsfield. That one recently. So me paint Williamsfield, which will have it phase 1C. It started, I think it started in the new year really and truly because it was on and off. December 1st was when the official December start. So I guess December. Because the whole ministry situation, they had pushed it back so that people could help out to the west. And really and truly is a really good tool, if you're be honest. Really good tool, they reach where you're reaching fast. There's a and the biggest thing that really happened this year with trans was the fact that this one the Williams Field Tour Road, in addition to the fact that the government essentially liquidated their position at the company and themselves to the public at $3.60. Yeah, then probably $5 something, So there is that. Yeah, so people still did make a little profit regardless since then. So the next one. The next one would be Stanley Motors, and Stanley Motors paid 3.90%. They paid out essentially 40% of their revenue to a dividend, which is very, very good. Essentially, Stanley Motors really and truly just operates 50, that's half a tree building up. That's the building in half a tree that is 58. It is across from the flow headquarters, but like crossroads side there. So essentially they have high they have tenants there, and yeah, one of the biggest tenants is Alarica. Only other thing that's thing where really and truly I say happen is them fully complete and 100% in their new building. Um yeah, that was on the platform. So there is that. Next one was Cygnus Credit Investment. I know Cygnus are different arms, but I talk about the credit directly. Cygnus Credit. Central lend money with, and the way them collect money can vary. It can be equity or the way them collect the money, and then predominantly in like lend money in the infrastructure manufacturing. I think, if I'm not mistaken, the service industry too, and financials. So there is that. I think they raise some money with them perpetual cumulative preference share, something like that. So yeah, so it was good. Them raise money and then not only other companies but also then other aspects within their company that help them overall. So there is that. As I say, this video is really and truly just going over the companies name briefly and then reviewing it. I don't want to keep it long because I also have the stock reviews and some of these companies will be going up. So there is that. Last dividend stock on this list is Carreras. Everybody know Carreras as one of the highest dividend paying companies. But funny enough, there is actually a company that paid more dividends last year than Carreras. So the next video, there will be that. So yeah, so Carreras, they paid 104%. So basically 4% more than the revenue that they made for the year and well the year 2024. But so for the year and them just they put it in the reserve. Regardless of a very high amount of reserves. So yeah, I still don't like the idea of them paying so much, but yeah. Essentially Korea dominates the cigarette company not only in Jamaica but in Caribbean as well. So they manufacture and distribute it. There is that. So if you look at the review as it relates to the the dividend stocks, I'm going to click on this. So in this address, SVL, then stock price actually fell 33%. TGH stock price rose 8.9%. Stanley Motor rose 7.6%. Cygnus investment fell 2.1%, and Carreras fell 0.3%. Granted, as relates to dividend now, SVL paid 2.96 in dividend, TJ's paid 5.67% in dividend, Stanley Motors paid 4.07, and this would be for this year, so year 2025. Cygnus paid 2.13%, and Carreras for this year paid 8.23%. Fine. Overall, I can see the growth. So really and truly, if you had it, you would have grown your portfolio 14% for SVL, 40% for Trans, Stanley Motors 11.6%, SVL you would have fell 30%, 30.6%. Cygnus essentially wouldn't move because what they paid in dividend compensated for the loss, which is interesting. And Carrera did have gone up 8%. So there is that. As it relates to the stable stocks now, the stable stocks, the Almond Z score really posed through this year as it really indicated and highlighted some stuff of some of the companies that we can categorize as stable stocks. So Wasinko Almond Z score was 7.32, which is good. You want anything over 3, means that the company not likely to go bankrupt. So yes, 7.32 Wasinko they make and distribute consumer goods. I think they've also now ventured into the beer industry, which coming in my next video, I'm going to speak on that because I did notice a few other stuff that might help them stay afloat or even propel themselves essentially. But so them do things in food, beverages, personal care, household items, and even pharmaceuticals. So yeah, they also deal very well in export, and they're this year, which will be 2025, I'm talking about. I've noticed that they have been partnering, like even they were now to expand their reach, essentially different institutions. So yeah, so now basically any corner you can get at the bottom of the screen. So there is that. Next one on the list is Jamaica Brothers Group. As you can see, Jamaica Brothers Group is at $2 at, well, 2.97 for them Almond Z score, which something happened with the US market with them, with some unscrupulous activities, and as such them stock price tank. It's laughing that Jamaica Brothers because it's such a big company. And NTV also footed telling them some money. NTV themselves have stuff, but what sometimes I feel like even me sometimes tend to forget that Staliching is different from NTV. So the company NTV is different from leaching, and sometimes um one in the other. Sometimes your perception of the company down because NTV has coins. From NTV has coins, it's just leaching now. Anyways, it's a blessing and it's a curse sometimes. So Jamaica Brothers, them raise chicken. They also do agriculture, animal feed, food processing, and not just chicken. So pork, um, different forms of meat. Them also in agriculture. Them also sell fertilizers and something that farmers use in order for agriculture. So Jamaica Brothers is granted the stock price is down, and if you're in the financial space at any given point, you can just say it's been done. It's fine. Next one on the list is Kingston Wharf. Kingston Wharf actually been about themselves a little bit. Almond G score 3.26. Solid company. Import people technically importing more. There is that. Funny enough, this year, no, still I still don't buy things online, which is so funny. People buy it for me. Yeah. Anyways, um, yeah. So there is that. The next one on the list that I had was separate. Separate at 2.34. Now separate stock price kind of fell a little bit, but honestly, I don't think they've made any other big acquisition. They've just been, I guess, what they've acquired. They've been now trying to, you know, integrate in the system to a point where it's at its maximum possibility of, efficiency. So yeah, it's just been stable, but it's a solid company regardless. And they essentially do the stuff like Synchron away, but them just really focus predominantly on like consumer goods and chemicals, but yeah, and hygienic stuff and something, but consumer goods predominantly. So yeah, the next one is GK. GK. When I did the Almond Z score for GK, I was saying that I can't use this metrics. I have to use something else for GK because they're in so much different industries. You can't just use this as a business model because predominantly the Almond Z scores like manufacturing and distribution companies. So there's that one GK as finance. They have the whole financial sector, Western Union, GK Capital, etc., etc., etc. They have different businesses. They have investment in human cognitive patterns, which they haven't talked about a lot. It's just one time it happened. One time they mentioned it, a cool 350 mil, somewhere around the line there. But yeah, I'll leave it as is. I'll leave it as is. Do the research for that. Anyways, this year, Saddam will be passed, sadly. From here, them saying, man, take a break, and somebody are going to cover them in the interim. I say, man, him get called. I mean, He's been with Grace for 14 years, I think. Let me check. Look. Yeah, about 14 years. Like 2011 to 2025 would have been 14 years. I grew up with him as, that person where a Grace when he just started investing and things. So to see him pass, yeah, sad moment. Since then, GK price did actually go down a little bit, but it's been just rallying. No, them have a new CEO, Frank James. We'll have to just grow to appreciate the new head and see what he brings to the table. Uh, but yeah, in a grand scheme of things, I say Grace is a large conglomerate and carrier. So there is that. Plus, Grace stock price is also cross listed. So they kind of fit the stock price to, yeah, it's cross listed and we'll leave Trinidad alone. Yeah, it is. See, and last one on the list as relates to um stable stock is Carib Cement. But no Carib Cement have a similar almond score to Zinco, that 7.24. Carib Cement produces cement. Yeah, as you can see, everywhere in Jamaica is being built up. Every house with the yard space I get licked down and turned into apartments. So honestly, Caribbean Cement has been going. And also since Melissa, it's been even they'll be getting more and more jobs and more orders. Honestly, I saw when Melissa was coming and said damage, and I said I was going to buy into Caribsman, but I don't know if for emotions or what. But honestly, whatever about buying it, I'm not buying a eat, nor I'm not buying a cargo handlers as well. You don't know the stock price, they'll go. It's just when I companies doing them thing, yeah. But like when it comes to them like tragic day and them some there, we're trying not to profit or them some there off of other people. As I invest, I'm probably to get more ruthless. And it's the same thing with well, what come on that is it that the equity. The equity. I want to see it, I was like, why you know put so like literally after the hurricane, like people are trying to build up on the money and thing, and I was going to make a video about it and I say, oh, I'm gonna wait to come. So said so then it I mean to retract it, which is fine. It's just not the time right now. It's a good company. It's just like it would be a company that get like any dividend or anything there from. You just have to just invest in it and hope say it operates similarly like how it operates with dollar. Hopefully you can get, a little jump in it. But that time was not the time. And I know why they did it because they either they don't want to drop it before the hurricane or they felt like people that if them drop before the hurricane about that as well. But due to devastation, them could have probably even get that money there and go and buy up and acquire stuff and money and etc. etc. But we'll leave that as is. As it relates to how they performed this year really, with Cinco grew 5.8%, which is good. Jamaica Brothers fell 47.4%. Kingston Wharf went up 9.9%. Separate fell 6.3%, and GK fell 11.4%. Carib Cement actually went up 21.6%. There is the raised dividends because even though they're not the predominant dividend stock, my threshold is technically 4% and above for consider dividend stock, and it has to be also has to be consistent. So there is that. Um, yeah, them still pay dividend. We think we pay 2.4%. So overall, if growth with Western could have been like 8.3%. Jamaica Brand has nothing, negative 47. Yeah, still be Kingston Wharf also pay 2.12% dividend, so we go 12%. Separate 2.12 and Grace 2.31, but they both also still were negative. So there is that. Carib Cement went up 21.6%, never pay nothing. I don't think so. I don't think they pay nothing. Um, but yeah, so they grew 21.6% at that time. Last on list is the growth stocks, and the dominant metrics that we use is the DuPont analysis to see what's their main growing factor. And the first one on the list is RPL, and the dominant growing factor was really and truly return on assets, but it fell because they've increased their leverage, or the leverage was increased to buy stuff. So the return on the assets that they have is now going back up, but it's a flash out. I mean, at that point when I captured information. So the DuPont analysis, as I could say, the main driver are as is. Profit margin was for last year 4.95. Return on asset was 1.31. And return on asset was 10.57. Really and truly growth stock, you want to check the stock price to see if you actually raise or no. But with the Regency, yeah, I think this year they opened the gas station on Spanish Town Road stretch there, so that was good. If then you get one of the new gas station will be there, trans, it'll be so nice, but I mean probably uh, yeah. Next one on list was Wington. Really and truly Wington was really for me just something you put out there. We have faith in it that it's going to grow. But I mean, to be honest, I haven't looked at Wington in much more. Because there's have some contrast coming up, but for some reason the market don't really accept it. So there is that. The next one was Tropical. Tropical Battery has essentially been like a stable company in a way, and I think the major thing that they wanted to go into the main market, for one, probably more capital, but two, the way how the finances look really and truly is a main market stock. This should be in a way where how them operate, and them kind of really think they stable. So there is that. Them come to the market again and transition from the junior market to the main market last year. So I guess there was that. Outside of that, there was some discrepancies in their finances, and that actually affected them negatively. Yeah, that affected them negatively. So I think them stock price might be not take a little hit from that. But we saw Tropical them distribute and sell energy storage products. So but alternative solar and industrial things that them sell. Wigton renewable energy using wind turbines and solar panel as their thing, and RPL sell gas, well LPG, etc. Them sell LPG, gasoline, and diesel. So there is funny, but no, funny one essentially manufactures baked goods and pastries and snacks. In a grand scheme of things, Honeybun has been, I think they've been changing up them strategy a little bit, which is good. They've been changing their locations because some of the locations were kind of hard to reach, so they're no more where the foot traffic is, which is good. So we should see the turnaround there. Granted, when you go places with more foot traffic, the rent might be higher. So we're going to have to see how that directly correlates with them performance if they watch that in yes or no. But still, good growing company. Them just need for either put some more preservatives so they can ship internationally, or they make the door or whatever on the way going to wherever they're going. And last one on the list is cargo handlers. Really and truly, cargo handlers in and out itself been doing well. But what has been pushing them, which is so funny, is an investment that they made about 3 years ago, which is the buying Hope Cement. They own 30% stake of a company that owns 10%, are them like capture 10% of the market. Essentially, it relates to cement and something. In addition, the cargo handlers also does export and import too. Export and import of the same building materials. So in a note itself, cargo has been handling themselves. Really and truly, cargo has been a stable stock in the grand scheme of things. However, they've been growing, and with the whole Melissa situation, they should be seeing some additional income coming their way as well. And for the last of them, RPL grew 17%. Wigton, Chapkabachi, and Honeybun, they all fell. Wigton 12.2%, Tropical 42.9%, Honeybun 12.7%, and Carglass has gone up 67%. So, make some money. I feel like for the next upcoming stock review, I'm wondering if I should do everything together or do it separate as is. I feel like going to separate stills, yeah, and and dive a little deeper into them, and I'm going to increase my strictness. I've been giving a lot of companies blind, even though I know say oh they may or may not really wow themselves. So this year I go a bit more strict and use some of the things I've learned as it relates to do an analysis thing for better predict stuff. Say so RPL overall without them they're not going to give the dividends. So RPL week time Chakawachi all never paid the dividend. Honeybun paid 0.37% of dividend and CHL paid 2.14 in dividend. So really and truly CHL basically almost raised up to 70% this year. Well, 2025. So yeah, this video is kind of a more slow paced video. The next video going actually with the stock picks that I picked for this year. A couple of them stocks here I get kick off and some I get reshuffled. But and there's some new things being added. But just to feel it out and make the video better because before I did record the video I was so long. So we just save my cover in a better space and yeah. So thank you guys for watching. This probably was a boring video, really and truly. But just to complete it and just complete it and say yeah, we did complete it. All in all, if you did buy stocks and everything, I'm gonna say your portfolio that up 4.5%. Not bad. Completing considering that the market's been red. So yeah. No, this is financial advice member. But as always, guys, don't forget to like, share, comment, subscribe, tell a friend. With that said, peace.